A lot of people are asking how to insulate their portfolios regardless of who wins in the upcoming US elections. Now, here's a chart that shows the S&P 500 sector dispersion, i.e. the dispersion or the spread in performance, as well as the average performance since 1990. Now, this is under Democratic presidents, 19 years, and Republican presidents, 15 years. It shows, interestingly, that average returns were higher in all 11 sectors during Democratic administrations than Republican administrations. Now that's interesting because markets tend to like or enjoy a Republican presidency. So if it's a Trump win, we most likely will see domestic cyclical companies doing really well, companies that will benefit from reduced regulation or perhaps deregulation. If it's a Harris win, girl, I don't know. And also, Elon Musk's antics have done nothing to help the situation. So now going back to the chart, it might seem at first glance that a Democratic presidency seems better for markets than a Republican presidency. However, there is one big thing to note, and that is this analysis is skewed by 2008, which we will all remember was the Great Financial Depression or Recession, and it was the worst performance since the 1990s for 8 out of 11 sectors. The only 3 sectors that didn't have their worst years in 2008 were consumer discretionary, communication services, as well as utilities. And without 2008, Republicans would have presided over the worst years for only 5 out of 11 sectors. However, just as a Republican administration can hardly be blamed for presiding over the onset of the financial crisis in 2008, which is, fairly debatable, a Democratic administration cannot be celebrated for outsized returns in technology during the tech bubble. Therefore, it is very difficult to discern sector performance patterns under different administrations that could reliably be expected to repeat themselves in the future, even if a party is relatively consistent over time on policies they strive to implement in different industries. Even if one could accurately predict the next president, the configuration of Congress is super critical in enabling the president to enact whatever agendas they have. So even if a one-party sweep happened, increase in political polarization doesn't guarantee harmony and agreement within a party. And finally, the economic climate could easily derail a party's agenda, and even non-economic issues could become more pressing. So to answer the big question as to how you should be positioned, well, repositioning your portfolio based on past sector performance can be really futile. Instead, what you should focus on is fundamentals in the economy and markets and practice a disciplined approach. How I'm investing is how I've always invested, which is to focus on quality companies, blue chip companies, mature companies that will most likely weather the storm regardless of who wins. So good luck in your investment journey.